Hello, ladies and gentlemen. Welcome back to the newest edition of Levelytics on video. It's good to be back, you guys. It's been a hot minute. I can't even remember the last time I published a video. I think it was near the end of June. The reality of what's been going on in my life and why there's not been a new video since then is that I moved across the country, and that involved a very long drive from the West Coast to the Midwest, which was very time consuming, but also an epic adventure. And I'm finally settled in. I finally pulled the mic out of storage. I'm fully settled in my new residence, and I'm ready to get back to talking crypto markets with you guys. And the beauty of what's been going on during my break is that crypto markets have not done anything. You can look at the Bitcoin chart right now, and let's look at since June, end of June. Price dumped near the beginning of June. We had this violent BTC dump from 75K down to 60K. And the BTC price, probably near my end of my last recording, was around 60K, and we're at 64K right now. So the beauty of what's been going on is that crypto has just gone through a really quiet summer after a gigantic drawdown from the 85K, 80K level, right? In the middle of May here, where the last time we had blue candles, right? Red momentum, candles only since May 16th, 2026, right? And before that, the last time we had bullish momentum, which is shown by the blue candles, is October of 2025. So it has been a very, very long down only or sideways market in crypto. And like I said, during my trip, which took place over the past month and moving in and getting that whole process going, fortunately, the market hasn't really gone anywhere. And to tell you the truth, I haven't even touched the Levelytics portfolio, because I think part of what actually dawned on me while prices were shuffling around here and I was going through my move is that crypto markets are downwards or mean reverting. And the problem that I've had during this bear market is that, I've been fighting the red tide, which is BTC red candles, right? Bearish momentum, and trying to buy altcoins along the way, right? Ones that break out to the upside. And what has happened over and over again, and it's just been a bunch of small cuts cutting the value of the portfolio down, is that they just completely reverse these breakouts. Effectively, because what we all know about crypto is that it all follows BTC. There's been some chatter over the summer, over the past year, about how, there's these select assets breaking out. They are far and few between, and they're very difficult trades to take. The reality is that crypto is a all moves at once type market still, and that it is very difficult to trade altcoins unless you are trading a mean reverting strategy right now. So I've even maintained 50% long for the Levelytics portfolio, which I can show you here. Not this. Here. This is the percentage of the portfolio that's in dollars, right? And this is currently at 49%. So 51% of the book, that means, is in crypto assets, including BTC and select altcoins. I don't actually have the chart of the select altcoins that it's in, but it's, Hype, I think a little bit of Arrow, all the big majors that are the ones that people would want to own on a fundamental basis, right? So yeah, I haven't even touched the book because I realized that the market is mean reverting. There's no need to panic. And the reality is that I think that we are probably near the end of what would be considered this bearish, endless period of bearishness, which has been, for BTC since October 2025. And I would say for altcoins since the election, right? Since the election pump in November and December 2024. So it has been a very, very long bear market. And I think we have paid our dues. I think it is probably near time where you start paying attention to crypto markets. If you wanted my 2 cents, I still don't think the market even moves before Labor Day, if I was to guess. I think, it's basically, I think after Labor Day, you start paying attention again. Football season's back. Everyone's back at the computer. People are done partying. The rich or the people of Wall Street, which, crypto doesn't even move on the weekends anymore, which just really tells you how captured it is by traditional institutions, or those are the large players on the market moving the price around. Back in the day in crypto, you used to have huge moves over the weekend. You don't really get that anymore. And a lot of it's probably just because BTC, right? It is completely in a new regime. There's the OGs sold a bunch of their bags over 100K. And the reality of what's been going on is that it is basically Wall Street at the wheel. And for that reason, markets don't really move on the weekends, especially during the summer, right? So everyone's back at the desk at Labor Day. Labor Day is the first weekend of September. So I think we've probably got 2 to 4 weeks left of what I would consider this really boring period. And I think after that, there will be an opportunity for this market to bottom or violently break down, right? And the range that we're paying attention to here is from 80K down to 60K. It's really simple. And there's been a lot of consolidation here, right? I think if I was to guess and I was going to play this market or be more active as we get closer towards September, you see this little range here from beginning of July to now, from 62, 61K area up to 66. I bet we test through this, break down one more time, and then we can go for it. And I think we'll get that in the next couple weeks, boom, and then you go up. And that would be like a really good opportunity, I think, to buy the last dip, the last bit of blood, the last panic before an opportunity for this market to bottom. And I want to show BTC versus a couple of other assets, right? It's always nice to compare BTC to equities and, a bunch of different charts. So that way you get a good idea of where it stands in the grand scheme of things. So this is BTC versus NASDAQ and DQ, or, people usually don't like to use this specific index, but it's still red. It's been red. This has been down only momentum since October 2025, right? So you get a blue candle here. We've talked about this before in the videos. I've talked about it in the newsletter. When you have long duration trends finally breaking, right? If you get a blue candle here after over a year, not over a year, but around a year of just down only, nothing but red candles, that's probably a decent signal that something is changing under the hood. And there's plenty of evidence, the price has just been down only for a very, very long time, right? And I think that's a good time to start buying again. So that's versus like, tech stocks. This is versus NVIDIA specifically, right? It's been pretty much down only since May of 2025, right? Nothing but red candles here. The last one was May 10th was the last blue candle. So we are basically down. I guess there's one sneaky one here, but it's basically down only for a year and a half. We're pretty close to 18 months of down only versus NVIDIA during this whole AI boom, while crypto's just gotten massacred ever since the Trump election, which we all thought was going to be a massive bull catalyst. That did not work out. And, it just is what it is. You got to take your licks on that. But yeah, that's NVIDIA. So let's compare this to S&P, still red. There's been like a little bit of blue sprinkled in between here, but you recover this level here, $9, 9 BTC per SPX. It starts to look good. I'm just waiting for blue candle prints. But the long story short is that it's been down only versus equities for a long time. So it's a good time to pay attention if you start getting some bullish price action versus these other instruments, right? Because these are all alternative assets that you could hold versus BTC. So that's BTC for right now. I want to talk to you guys about the metrics that I shared in the newsletter though, right? Let's take a look real quick. So this chart shows you the percentage of assets that have traded sideways over the past 90 days. And the way you measure sideways, right? A lot of people might wonder has an asset broken to new 90-day lows or new 90-day highs over this period? And if the answer is no to both of them, that's sideways, right? So no new 90-day highs or new 90-day lows. And right now we are sitting at 70% of altcoins, and this is measuring across all perpetual swap pairs on Bybit, right? So that's a large selection of assets. I've told you guys before that this is probably over 500 pairs of assets that they have listed on there. So it's a pretty healthy sample size. And we're right around 70%. The big juiced up levels where you have a large percentage of assets trading sideways over a 90-day span is like 80% or more. You can see that in other periods. This just shows you a lot of buildup in charge, right? You had it in January 2026 when it got over to 92% and price was retesting the underside of 100K, and then we just rugged, right? You got it here where you got up to 86% April 26th, which was right around here, somewhere near a top, right? Somewhere around this 80K resistance level. And then we rugged, right? One last time. So we're getting that charge up again and a lot of sideways. And I assume after another 2 to 4 weeks of sideways, you'll start getting some charged values. And I think a lot of the market has grown apathetic to the idea of price ever breaking out. So I think you're kind of getting to this point with people where people have just stopped betting, right? And that's why that apathy will show up in sideways price action. People are just bored, falling. And also when you get lulled to sleep in markets, that's usually when you get violence on the other side of it, right? So that's something to pay attention to. There's a lot of assets trading sideways. And I think it's just all going to show up. I don't know what the catalyst is going to be. Sometimes price moves and then you get the catalyst explaining why these things occurred. But I think there's going to be some catalyst on the other side of it. It sounds like Clarity's not going to be that anymore. It sounds like Clarity's getting punted for a vote for later or after the midterm elections. I don't really understand how the whole politics machine works, but it just doesn't sound like that's going to be the catalyst. But I think there will be an opportunity for the market to break out. And until then, like I said, until things start looking really convincing, I'm pretty comfortable with like 50% allocation to the market, right? Because the market's been down only for a long period of time. So there is a justified reason to own some of these assets, especially as BTC trades sideways over a long period of time, right? It's been basically sideways since February. We're kind of 6 months into sideways, even though we're like trading on the underside of this level. So that's a long duration period of sideways. And and like I said, in the meantime, altcoins have been bleeding out since December 2024, right? So there's just a lot of reason to start thinking like, okay, at least 50% allocation, especially when there's no momentum in the market. That's kind of just like, I want to be invested just in case the price breaks out in a violent way when my momentum indicators, for example, are still printing red. That's the number one thing right now. Like normally I would just only want to own when things are blue, but I want to get some element of value built into the portfolio, right? And this shows the median volatility of altcoins. And you can see that it's at multi-year lows. What is it at right now? 3% daily. And the last time you had this value was in February 2024, right? That's a very long time. This is a very quiet bleed out. You can see since October, November 2025, volatility has just been dying out, which is what crypto does, right? During bear markets, that's exactly what happens. People get bored. People step away from the computer, stop trading, stop assuming the price is going to break out, assuming the worst. It's like sideways or down at best. Nobody's talking about it. And this summer, summer is also a great period for that reaccumulation or possibly redistribution phase to occur, where people just kind of check out, slowly buy or sell their positions, get out of it. There's no panic. And there's a buildup, right? But this also creates the opportunity for violence, right? When you have a lot of quiet in the market, right? It's just like the market gathering its footing before it's about to go on a major sprint, right? So we are inevitably going to get a big breakout, and it makes sense that we're reaching that period where in the fall, everyone's back at the desk, pretty good value, prices traded sideways for a while, altcoins have bled out for 18 months to 2 years, 2 years basically. You get to December at this point, you're pretty damn close to 2 years of down only from altcoins. It's been a pretty gnarly bear market. So that's something to keep in mind. So now this shows you the consecutive days in a row where altcoins haven't broken down over a 90-day span. Keep in mind, my titles are really bad. If you look at the titles of these charts, I kind of need to change these things because like this is just also the symbols. I don't know what's going on here. It's just not reader friendly, basically. But long story short, this counts the consecutive days without a market-wide breakdown in altcoins, is what it tells you, right? So you get big buildups. You had it in, and this obviously, these buildups happen during bull runs, right? You'll get large periods of where the price is going up. Obviously, that means there's not a huge market-wide breakdown. So after the ETFs got approved, you had 245 days of no breakdown. And then the breakout after the election was 150 days, right? There's a pretty strong run starting in September leading up to the election. And then you had, tons of sideways up here. So obviously you don't get some nasty market-wide breakdown leading into October 2025, which is 174 days, right? That's like 6 months of prices not breaking down. And then obviously there's a lot of violence on the other side of that when the price broke down. So we are reaccumulating. Obviously, we had a big breakdown here in June 2026, which is when I basically checked out. I was like, all right, the price is not going to go anywhere for a while. I actually tweeted out that I thought it was going to take at least another 90 days before we would get anything sort of remotely exciting in crypto. It just happened to time very well with my move as well, which is partially why I didn't feel guilty about stepping away in terms of there's not much to update people on, not much to trade in the market, not many update. It just... you reach a certain point in these bear markets where inactivity is almost to your advantage, right? You don't want to get on tilt and overtrade your portfolio to gross levels, right? And that's one thing I'm excited about is that if you look at the Levelitics performance, it's outperformed BTC. The blue line at the top is the Levelitics performance, which is down 33.83%. Nothing to brag about, but better than BTC since it started in October 1st, 2025, which, talk about marking the bull market top. launching Levalytics. It's been a brutal go of it since then. And then BTC's down 45% since October 1st, 2025. And then altcoins on average are down 65% since that period, right? So there's no reason for me to want to give up this lead. Obviously, the main benchmark is being in profit on a dollar basis, but it is good to also be in profit. It's at a minimum good to be outperforming BTC and alts. I'm not really trying to do anything fancy at this point in time. Like I said, the market is fully asleep. You look at the volatility, dead. Percentage of assets sideways, increasing. There's just a buildup. And I think we're going to get a little bit more of a buildup before we get more violence. And, this has had a decent buildup, right? Since what? This goes all the way back to October 2023, which is when the ETFs got approved. But yeah, there's been a buildup here. Otherwise, we've had some breakdowns here and there and some buildups. But let's look at the percentage. This is the cumulative number of days in a row that you haven't had a market-wide breakout to the upside, right? This is the other side of it, being a bullish impulse. Going into the election, there was 222 days. This was a very long year. A lot of 2024 people don't realize after the ETFs got approved at the end of 2023 was a very boring sideways year. And actually altcoins kind of they didn't die, but they did take a little bit of a beating and they went sideways for a hot minute. And yeah, it was a pretty boring year. But then eventually, right, this goes to zero because the price finally breaks out and you got a violent breakout November 8th through 10th, around this period, right, where you finally get the price moving upwards. And then now compare that though to now, how many days in a row it's been without a breakout to the upside. It has been 599 days in a row, 600 days. We are not 2 years, but we are reaching that level where, it's been 20 months, 600 divided by 30, 20 months. So it's been a very long period without the market-wide breakout to the upside. This effectively tells you how long it's been since altcoins have pumped reliably. Obviously there's a 1 week pump here and there in crypto markets, but this is because this is gauging over a 90-day span. 90 days is a good way to gauge a reliable, durable breakout. And so it's been 20 months since there's been a durable breakout among altcoins or market-wide in crypto. And the last time it happened was the election. So it has been a very long go of it. We are deep, deep, deep into this bear market. Unfortunately, I told you guys I had to delete my database. This data used to go all the way back to, I don't even know, 2021. But unfortunately, because I had to delete the database, I'm only going back to 2023 now. But maybe at some point in the future I'll fix that and start paying a little bit more money. But for the time being, like I told you guys, I'm trying to keep things affordable, cheap, but at the same time insightful and useful for you guys. But yeah, it's been a long bear market. We are at that point where I think it would be more than reasonable for price to break out. However, there's no need to rush into it. Enjoy the rest of the summer is what I would tell you. But yeah, moving on to the next chart. This shows you the percentage of pairs on Bybit with an RSI less than 30, right? And below 30 tells you that an asset is oversold generally. That's the gauge that I use for it, right? So these big spikes occur when a lot of assets dump. And our most recent dump was June 5th, right? Which was June 5th is right here on the market dump. So we are recovering from a dump right now, and you can see that we're finally getting close to these levels where things are flattening out a bit, right? You want to kind of get a period where you get some just flat price action. And I think, there's been a little bit of fear, right? You get another pump here on the metric on June 24th, which is like a little dump back into the 60K level. And I think every time you get a dump now, you're seeing some panic, right? Even July 29th, which was what? Yeah, this is a pretty mild dump. You can't even see it on the price chart, but there is panic going on here. So that's something to pay attention to. So we're kind of getting to that point where everything is going sideways and any small puke becomes panicky, right? And it's just we're kind of reaching that point where I think just people assume the worst and people don't expect a breakout. And there's still people talking about Sailor, STRC. But the reality is that chart is kind of recovered. I think the reality is that panic has subsided. There's going to be people constantly talking trash about it. But I think this little dump here that we had at the beginning of June where we got market-wide RSI spike, this was kind of it, probably. I think we've squeezed out as much juice as we possibly could have out of this bear. And like I said, for altcoins, it's been going on for 18 months, almost 2 years, and for BTC, it's been a year straight of just sideways or down only. Another thing to pay attention to now, right? This shows you the percentage of perpetual swap pairs that have an increase in open interest. And that value is currently right around 67, basically just south of 70%. This has been a big buildup in OI across many pairs, and that's been going on ever since June 5th, right? There was obviously a deleveraging event. You can see the percentage of pairs with an increase in OI goes down, right? From 60% down to 32, right? That occurred when people just got caught off sides on the wholesaler thing, buying resistance, getting excited about a breakout. I got excited about it for a bit. But yeah, there's been some buildup here. There's definitely leverage under the hood going on across the entire space. So this is just a quiet thing that adds up on top of the lack of volatility, bunch of assets trading sideways, people levering up. It's probably people getting bored, right? You probably need to lever up to get more excitement out of the market because the prices aren't really moving. This creates a situation where you have pain possibly on the other side for bulls or bears. You're not really sure yet. It kind of remains to be seen what actually is going to happen here. But yeah, this is another signal going into September. Like I said, people are back at the desk. We've got a bunch of assets trading sideways, low volatility environment, and deep value, long duration bear. It's time to pay attention. And that's why, I'll get when the time comes for BTC or other altcoins, let's just even look at, where is this bad boy? Arrow USD, right? Like you get these assets and they start trading blue. I'm going to trust it going into September, right? You get a breakout, I'm just going to buy it. And obviously you guys will see it in the newsletter. You'll see in the videos. I'll be talking about it, justifying the position. But there's just been it's just been a huge long buildup of a bear market. There's plenty of reason to justify why you want to hold. But at the same time, right, because of this leverage buildup, I also think that's why I think it makes sense for me to just keep 50% of the book actually allocated, just in case there's just some huge bearish deleveraging event and you get a big spike. It gives me an opportunity to recover some of these losses, right? Down 33, 34%. Just get a quick, whatever back, get a quick percentage chunk of the book back. And yeah, so that's worth paying attention to. And yeah, this leverage is a warning sign. This is a warning sign that it's probably time to pay attention as well. Because, leverage never lasts in crypto. People eventually get maimed. And I think that is it. But yeah, guys, it's good to be back on the mic. I was pretty nervous about it, but the reality is once I have gained the initial comfort from doing these videos, it's kind of like riding a bike again. It's good to be back. If you guys have any questions, comments, concerns, quality of the video, quality of the audio, or if you think I could do anything better to make this more interesting for you guys, I'm going to start brainstorming new ideas of ways to do these videos for you guys in a way that's value added and exciting, but at the same time, most importantly, educational. Obviously, none of this is ever financial advice. This is just me sharing my thoughts on the market, and hopefully this provides some extra insight or different perspective on ways for you guys to look at the market or managing your portfolios. And I really appreciate the time, consideration, and attention. Thank you so much, guys. Have a good one.